Are you self-employed? With tax season just around the corner, it's time to make sure you aren't forgetting about any business write-offs, which could help reduce your tax bill. Hi. My name is Kat and I'm a chartered professional accountant. On this channel, we discuss Canadian tax, accounting, and personal finance, with the goal of helping you keep more of your hard-earned money in your own pockets. Today's video is all about 10 tax write-offs for self-employed businesses in Canada. We'll go over home office expenses, motor vehicle expenses, and 8 other tax write-offs you don't want to miss out on. At the end of the video, I'm going to share a free tool designed to help you easily track all of your business expenses. So let's jump right in. First things first, what is a tax write-off? People often throw this word around without necessarily understanding what it means. A tax write-off is another way of saying tax deduction. In the case of a small business or self-employed individual, we're talking about an expense, which you can use to reduce your business income, thereby reducing your taxes. For example, if you made $30,000 in your business this year and you have $10,000 of deductible expenses, your taxable income will be only $20,000. Now that we understand what tax write-offs are, let's start with business use of home, more commonly known as home office expenses. If you're self-employed and working from home, you can deduct certain expenses as long as one of the following 2 conditions is met. Either it's your principal place of business, or you use the space solely to meet clients or patients on a regular and ongoing basis. The expenses are deductible according to the percentage of the home which is used for business. In general, we use the area of the workspace, compared with the area of the entire home, to calculate the deductible amount. However, if an expense is entirely related to the workspace, for example, the cost of painting your office walls, then it's 100% deductible. Lastly, business use of home expenses are limited to your business income, in other words, they cannot create a business loss. That said, any unused amounts can be carried forward to future taxation years. So, which home office expenses are deductible? If you're a tenant, your rent is deductible. However, if you own your home, your full mortgage payments are not deductible. Only the interest portion of your payments can be claimed as a business expense. As a homeowner, you can also deduct your property taxes. Regardless of ownership, home insurance premiums and maintenance expenses are deductible. Utility charges, such as for electricity and water, can also be claimed. Lastly, if you own the home, capital cost allowance can be deducted for the office portion of the building. However, keep in mind that this could affect your principal residence exemption when you sell. We'll talk more about CCA towards the end of the video. For now, let's look at a quick example on how to calculate your deductible home office expenses. Let's say your home office measures 100 square feet, while the area of the entire home is 1,000 square feet. We simply take the area of your office, divided by the area of the home, and we get 10%. This means that 10% of all of the expenses listed a minute ago can be claimed for business use of home. If those expenses total $10,000 for the year, for example, you would therefore be able to deduct $1,000 on your tax return. Next, let's discuss motor vehicle expenses. Do you use your car to earn business income? Let me know down in the comments. If you do, you can deduct certain expenses. But keep in mind that if you also drive the vehicle for personal use, only the portion related to your business is deductible. To calculate the deductible portion, you need to take the number of kilometers traveled for business, divided by the total number of kilometers traveled in the year. The CRA recommends keeping a detailed logbook which shows the date, the destination, the number of kilometers traveled, and the reason for each business trip. You should also take note of the odometer reading at the beginning and at the end of the year. Deductible motor vehicle expenses include license and registration fees, fuel and oil costs, electricity costs for zero-emission vehicles, car insurance, maintenance and repairs, interest on money you borrowed to buy the vehicle, and finally, leasing costs. Before we go on, if you've learned something so far, please take a second to give this video a like, it really helps the channel. Alright, let's continue with 8 more tax write-offs you don't want to miss out on. First, meals and entertainment. These are expenses incurred for food and drinks, as well as things like tickets for sporting events and room rentals. It's important to note here that only 50% of these expenses are tax deductible, and they must be reasonable. This means that, if you meet with a client at a restaurant, for example, half of your bill can be claimed as a business expense. Second, you can also deduct any business-related travel expenses for things like accommodations and public transportation. So, if your business requires you to travel, you can deduct things like airplane tickets and hotel rooms. Moreover, the 50% rule applies to any meals and entertainment consumed while traveling. Third, the cost of a maximum of 2 conventions per year is tax deductible, as long as the following conditions are met. The convention is related to your business, and it's held by a business or professional organization within the geographical area where that organization normally conducts its business. Moreover, if the convention cost includes meals or entertainment and your bill doesn't break down these amounts, you need to subtract $50 per day from your convention expenses and claim only 50% for that portion. For example, if you attend a 2-day convention that costs $500, and your bill doesn't specify how much of the $500 is for meals, you would deduct $50 times 2 days, or $100 from the total cost. Your convention expenses therefore total $400. You would then claim 50% of the $100, so $50, under meals and entertainment. The next 5 tax write-offs are pretty straightforward. You can deduct any advertising expenses incurred to promote your business. Note that certain restrictions apply if you advertise in periodicals, such as newspapers and magazines. You can deduct the cost of any office stationery and supplies, such as pens and paper. You can also claim bank service charges, as well as any interest on money borrowed for business purposes. You can deduct professional fees, such as those paid to your accountant, notary, or lawyer. You can also claim bad debts as expenses. This is when a client owes you money for products or services rendered, but still hasn't paid you after you've exhausted all means to collect it. To claim this expense, the amounts must have previously been included in your income. Finally, let's talk about capital expenditures. This is money you spend on long-term assets such as a computer, office desk, equipment, and so on. These items are called depreciable property. Since they are used over long periods of time, you can't deduct the full amount of the expense in the year of purchase. Instead, you claim what we call capital cost allowance, or CCA, over several years. I could make an entire video on CCA alone, but here are the basics. Each capital item you buy goes into a category called a class of depreciable property, depending on what it is and when it was purchased. For example, furniture usually goes in Class 8. Each class has a rate at which you can claim CCA. In other words, the class your item falls in determines how much CCA you can claim each year. Class 8, for example, has a rate of 20%. When claiming CCA, you can choose any amount between $0 and the amount calculated using the rate of the category. For example, if you bought an office desk for $1,000, it would go in Class 8 at 20%. 20% of $1,000 is $200, so you could claim anywhere between $0 and $200 of CCA as an expense. If you'd like me to make a detailed video all about CCA, please let me know in the comments down below. Alright, so we discussed 10 tax write-offs for self-employed businesses in Canada, but you should know that there exist quite a few other expenses which you can also claim on your tax return. For a complete list, I recommend visiting the CRA's website or looking up Form T-2125. Next, I want to share a free tool which I created to help you easily track all of your business expenses. It's a spreadsheet that contains all of the expenses you can claim as a self-employed individual, with separate sheets for home office expenses, motor vehicle expenses, inventory, and depreciable property. You simply enter how much you spent each month for each category, and the file calculates everything for you. At the end of the year, you can just use this expense tracker to fill in your tax return, making it quick and simple. To get a free copy of the tracker, just click on the link in the description box below. So there you have it. We discussed 10 tax write-offs for self-employed businesses in Canada, including home office expenses, motor vehicle expenses, and 8 other tax write-offs you don't want to miss out on. I also shared a free tool designed to help you easily track all of your business expenses. That's all for today's video. I hope you found the information helpful. Don't hesitate to ask your questions or submit special requests for future videos in the comments. Be sure to hit that notification bell if you want to be the first to know when a new video is released. Thanks for tuning in, and I'll see you next time.